I want to bring in Krishna Guri. He is the Evercore ISI vice chairman, and maybe you can speak to the question that we were just talking about earlier with Tom here. Do you imagine that the president could fire this head of the Fed? Is that even conceivable to you?
So I think even at this moment, it's probably not likely. But it is clearly in the conceivable set. It's something that we have to take seriously, as a risk, and I think a serious risk to markets.
And if he does that, what do you think is the risk to markets? But then secondarily, what do you think of this sort of shadow idea? It's something that Scott Besson had raised before President Trump was elected, this idea that you could nominate effectively somebody who was, in this case, I imagine you'd have to find somebody who's famously dovish and announce their nomination, months ahead of time, in which case that somehow the market sees through whatever this Fed chair is doing with the expectation that the next Fed chair is going to be significantly different.
So let me take those in order, if I may. So first of all, I think we're already seeing, like right here and now, in the equity futures, in the dollar, in the bond yields, we're seeing a clear signal from the market that it doesn't like even the idea that the president might try to remove the Fed chair. There's been some loss of confidence in U.S. economic policy making in recent weeks. We've seen that in this very odd combination of upward pressure at times on longer-term bond yields combined with a weaker dollar. That suggests global investors pulling capital out of the U.S. But what you've seen is ongoing confidence in the Fed. You've seen ongoing confidence in the Fed, and that is crucial. You've seen those inflation expectations well behaved, well anchored. And that's what will eventually allow the Fed to be able to cut rates when we get to the point that unemployment has increased materially. But if you start to raise questions about Federal Reserve independence, you are raising the bar for the Federal Reserve to cut. If you actually did try to remove the Federal Reserve chairman, I think you would see a severe reaction in markets with yields higher, dollars lower, and equity selling off. I can't believe that that's what the administration is trying to achieve. Now, with respect to the question of, what are we doing in terms of shadow Fed chair, I think it's not a great idea to have someone out there trying to second guess the Federal Reserve chairman. But it would be less dangerous if that person did not have a seat on the FOMC, and there are no vacancies right now.
Right. Okay, so let me ask you then a different question, which is, and this is kind of an interesting meta, maybe, idea here. We all think that Jay Powell is, quote unquote, independent today. But of course, whoever the next person is, you would hope is going to be independent too. But it's possible that you would see that next person as a puppet of the administration, maybe not independent. I don't know. Would the market have the same kind of reaction?
So I think it's really important that whoever takes over from Jay Powell should take over in good circumstances, in circumstances where that person looks that as he continues to have the independence that all Fed chairs have had in the modern era. That's going to set the next Fed chair, presumably someone who Trump wants to occupy that position. It's going to set that person up for success. But if it looks like that person is coming in without weakness, without independence, at the beck and call of the president, then you would set up the next Fed chair for failure. And I hope that on sober reflection, the administration will understand that, look, by all means, it's the president's right to nominate the next Federal Reserve chair in regular order. They should think about how trying to set that person up for success, so it also rebounds to the success of the administration as well.
Christian, I worry about trying to, anticipate the future for the Fed, because they notoriously have not really been good at doing it. Maybe it's just the nature of the beast, that it's almost impossible. You're always looking at the rearview mirror in backwards data. If he were to be wrong again, and if inflation isn't really the problem right now, because of the tariffs. And we really are going into a slowdown for a lot of reasons, trade wars, everything else. And if we're late, and we should be cutting now, and everybody again says, uh-oh, looks like Trump was right and Jay Powell didn't lower rate, it would be bad to go out on a mistake. So that's what I mean. I don't know if he'd be set up for success. It'd be almost like he should have gotten rid of him earlier. And all these guys are just, they can only be right for so long. I think a lot of times they should get out when the getting's good.
So, look, I think it's always the case that the Federal Reserve is only making the best judgments that it can under extreme uncertainty, and it's going to make some mistakes. I think those mistakes are, of course, still more likely when you're being hit by very difficult shocks. And a big trade war is a big man-made shock. It pushes inflation up. It pushes growth down. So is it possible the Fed could make a mistake in this environment? Yes, it absolutely is. And the question that you have to ask yourself, the question I think markets have a lot of conviction on, is would you rather have an independent group of people, an independent group of experts trying to make those calls as best they can, or do you think those decisions would be better made under political pressure? That's the issue.
Now, you know, we've batted around a whole bunch of names over the years of potential Fed chairs, and one of the questions we were just discussing earlier is there somebody out there right now that you think is, quote unquote, famously dovish, meaning to the extent that you would want to nominate somebody who the market would see this way, who is that person?
So I'm not actually sure you'd want to nominate someone who is famously dovish. You would actually want to nominate somebody who has very strong hawkish credentials, and so the market would trust them, including to the point where they decided that it was appropriate to get cutting on interest rates. If you nominate someone who has a very dovish reputation, then the bond market would riot. So that's why I think there's interest, for instance, in looking at former Fed Governor Walsh, who does have a reputation as being hawkish. Again, I think, though, the manner of the appointment would be crucial. Regular order.
So you think because he's known as being hawkish, then he will come back around?
That's a different question.
I think Krishna's trying to do the Jedi mind trick, though. You know?
Not who Trump, not who should be nominated, who Trump wants nominated. Trump, if Trump
but actually what he's saying is, Walsh would have the credibility because he looks hawkish.
These aren't the droids
but he's saying, in fact, he would be
Watch out
dovish.
for the bond market. Yeah.
Because the bond market would think but you think Trump is playing the three-dimensional chess where he's thinking about how the bond market's going to react? No, don't tell you I've told you that. Don't say I've told you that. I don't know any more than you whether there's a method to the madness at this point. So you think that President Trump would think, wow, Gore should be good for the bond market, I'll nominate him?
Again, I think the key thing here is it's strongly in the administration's interest to take a deep breath and let Fed Chair Powell run things for the remainder of his term. That's the best shot of keeping inflation expectations well anchored, keeping bond yields well behaved, and allowing the Fed to cut without causing real problems in markets.